But I want to also talk about a position that I'm looking at going into on Tuesday when the markets opened up. So I spent really the majority of the weekend so far going through the 10K filings and taking a look at listening to the conference call for a company called Smith & Wesson. So I've talked about catalysts before, and I'm always looking for ways that are going to be meaningful for stocks to go in the direction that we think they're going to go based on not only fundamentals, not only technicals, but also a catalyst. And in America right now, a lot of folks were talking about defunding the police. You hear a lot of that. You open up the news and you can't get away from a headlines not talking about defunding the police in some form. So it has a lot of Americans scared, and it's caused an increase in new ownership of guns because people want to be able to protect themselves. They say, hey, if we're not going to have the police to protect us, we want to have some form of protection. So they're going to get training on guns, and they're purchasing new firearms. And that has benefited greatly Smith & Wesson. So when you go ahead, now when I took a look at the reports, they crushed the numbers and the estimates that analysts had put on the board for them. They actually crushed the earnings and beat estimates. And they don't see that pattern. They don't see that pattern stopping. They see that demand is increasing. The only question that the investors had were, because it was obvious, the numbers are the numbers, that you can't lie about the numbers. They see the demand as well. And Smith & Wesson is taking the majority of the ownership, so of the market share. So the question was, are they going to be able to keep up with demand? And they have implemented a process using robots and artificial intelligence to be able to allow them to be able to manufacture guns at a higher rate than just about anybody else in the industry. Along with that, and the CEO said, we haven't gotten to the level where we're concerned about the production. We think about it. We do everything that we can. We have our processes in place before even this happened, and we're maximizing our production. And when we get to that point, I guess we'll start to go ahead and figure out something else that we can do to go ahead and increase production from there. But we don't see that being an issue. So that put a lot of the investors' minds at ease, but it also states very clearly that this revenue from new ownership is going to continue into the next quarter. So I'm looking at being able to go, instead of going long on the position, what I'm looking to do is I'm looking to short puts on the position. So what exactly does that mean? That means that I am looking to go ahead and obligate ourselves to take ownership to become a shareholder of the company, which, by the way, they are now starting a program where they're going to be paying a dividend. So it's not a high dividend, but they're starting. That just tells me that they're even more confident. And the CEO says, we're not going to start at a high dividend. We're going to start with the dividend issuing out to our shareholders because we have a influx of cash, and we see that continuing on. But we're going to start at a point where we are comfortable with what we're given, so we don't have to walk away from the dividend should something happen. So we're starting at a point where we're comfortable, and we're going to scale from there. So that just tells me that they're very, very confident in the direction that the company is going. So what I'm looking to do is the stock right now is trading at about 18 and some change, $18.30 odd. Actually, I'm actually going to pull up the chart right now. Let me share that with you so you can get a sense of what I'm talking about here. So this is what we're looking at. So this happens to be Skyworks. This happens to be Smith & Wesson. And you can see they closed at $18.16 on Friday. The stock's been in an upward movement. We had a pullback here. I see this as an opportunity. But instead of going ahead and saying, you know what, I'm going to buy shares or I'm going to go long call options, I'm going to short the put. And I'm going to short it at the $17.50 area. What exactly does that mean? That means that if the stock does pull back down to $17.50 or below, we're obligated to buy it at what price point? At $17.50. But the credit I'm taking in is about $1.30. So it reduces $1.30 to $1.50. So it reduces our price point from $17.50 down to almost $16, maybe $16 and some change, depending on what type of credit we get in. And that is going to be a well worth position to hold. I don't think that we're going to get assigned much like what I've done in the past, I don't think we're going to get assigned Smith & Wesson. But if we do, I'm okay with it because I like the stock and I like the future and I like where it's going. But I think what will happen is we'll end up keeping the credit. I think that Smith & Wesson goes higher from here. So if it goes higher from here, we keep the credit. If it stays flat, we keep the credit. If it pulls back down to 1750, we keep the credit. Depending on the credit that we take in, our break-even point on this trade is $16 to $16.30 is our break-even point. And then after we get assigned that, there's other things that we can do to go ahead and generate income as well if we do get assigned the trade. At the same time, I'm probably going to take a certain percentage of the credit that we're going to take in, because we'll probably take in about a $7,000 to $8,000 credit, which would mean by the third week of September, which is right around the quarter, and like in 14 days, we will add another, just with this trade alone, another $7,000 to $8,000 to the account. However, what I'm looking at doing is protecting ourselves in case I'm wrong and the stock doesn't do what I think it's going to do, which is to go up. If it pulls back down and we get assigned the trade, I'm okay with it anyway. I've already stated that. But I also want to get it at even a lower price point. So I'm going to take a certain percentage and I'm going to buy insurance. I'm going to go ahead and buy insurance for this trade that will enable us, if the stock does go down, not only do we get assigned the trade at a lower price point, but we also collect money for the stock going down. So that will be a very, very good thing. I don't think that will happen though. I think the stock goes higher from here. So at any rate, I'm looking to add to net out somewhere around $7,000, $7,000 to $8,000 in the next 14 days, just with this trade alone. And the beautiful thing about it is the stock doesn't have to do anything, and it could actually go down $2 and we'll make money. So hopefully you enjoyed this, but I just thought I'd give you my insight on something that I'm taking a look at doing on Tuesday or Wednesday of next week. Take care, guys.